Hi friends, welcome to Traziyaz. Today we are going to learn about do's and don'ts in trading psychology. இந்த வீடியோ நீங்க தமிழ்ல பார்க்கணும்னா நம்ம சேனலோட பிளேலிஸ்ட் போய் செக் பண்ணுங்க. Let's move into the topic. Do's. Here we have listed all the list of do's in the trading psychology. So whenever you entering into a trade, before entering into a trade, we need to perform certain actions. Analyzing the stock market. Before entering into a trade, we need to definitely analyze the stock market, how the market will be performing today or for the next day. You can get the information over internet or anything, like whether there will be an election or any budget or any war, any political issue. So that time the market will be more volatile than the normal time. Then if there is any news like the bonus or issuing dividend or anything about any particular stock, that time that particular stock will be little more volatile. So that time we can make profit or loss in a rigorous way. So we need to be very much cautious about analyzing the market before entering into any trade. News analyzing, we need to be very much cautious and proactively we need to check the news before entering into any trade. So how the today market will be like, we may have any time, say for example, in the morning 8 o'clock you may have seen the news, but there were no information about your stock or the market, but suddenly at 9 o'clock or 9:10 there may be some other news that arises unexpectedly. So you always need to be very much watchful and cautious about the news. In stock selection, you have to be very much specific about your stock selection and the criteria or the strategy you have. There are a lot of methods to pick a stock, so you need to decide how your stocks will perform today. You need to be you need to know that how your stock will perform today, whether it could be a trending or ranging. So you need to know about that, so based on which you can take a decision how the stocks will perform and where the entry and exit could be. The number of trades, you have to be very much sure about the number of trades you are going to take based on your capital and the margin you have. Most of the people do 1 or 2 trades on any day, but if suddenly the number of trades are getting increased, which means that you are not doing it in a proper and analyzing way, you are deviating your own strategy, that it could say. Number of lots, also you need to be very much sure about what is your usual number of lots according to your margin. If you deviate that, it is not a normal or a proper trading method, you are deviating your own condition, then it means that it is not proper trade, it's a gambling. Then limit price, you need to set a limit price in your trade. That is the best method to best approach for a trading style of any professional traders, because you need to analyze the market, and if a stock price reaches any certain price limit or position, so based on a candlestick or a price action or trend line, whatever it is, so you can already set up place your trade using a limit price for both buy and sell. So for entry, you can expect it could reach the bottom of a particular point. So as soon as it hits the point, the trade will be automatically taking place. Then once it reaches the exit price, that you can close. If you don't set a limit, it will keep on increasing your desire to get more money. So it is not a proper way of trading. So setting a limit price is more advisable way. So both target and stop loss should be set in order to not lose the entire money. Since stop loss, if you don't set a stop loss, it will eat all your money. That what happens to most of the traders in the beginning of their career. Partial capital, if you have 1 lakh for example in your amount, in your account, so that time if you should have a proper idea of how much money you are going to take from that for a particular trade, and for the next trade how much again you are going to use from that money. But if you don't have any idea and use all your money in one single trade, then definitely there will be a very big loss that we could experience. So that we should avoid. Then minimum leverage. Most of the brokers are providing a leverage. Say for example, 5x, 20x, sometimes 500x based on your broker. So the leverage you are going to take, you should know how much money. Leverage is nothing but it is just a kind of debt or a loan you are getting from your broker. Say for example, if you have 100 rupees in your account and you are getting a 5x leverage, which means you are borrowing 500 rupees. So you already have 100 rupees, so which means you are borrowing 400 rupees from the stockbroker. In that case, if the stop loss or the risk amount you are taking is more than what you have in your account, I mean more than 100, so that time definitely the trade will be automatically squared off and you will get lost. So use your leverage wisely, accurately entry and exit. So you need to be very much accurate in both entry and exit. You should know, you should draw a plan, you should draw horizontal lines or trending lines in your chart, so that based on which you can decide where is the right place to enter and exit. Then follow the trading plan. Most of us, even beginners or experienced traders, they will have their own trading plan with a strategy. If the trading plan is getting deviated, that we should know something is not going in a right direction. So we should have a proper trading plan and we should act accordingly. Don't. First is the overtrade. We should not overtrade. I mean, we should not put any overtrades in the platform. Like there is a limit for us. We know daily one or two trades we usually take, but if sometimes we go for a 4, 5, 10, so that time it is not a trading, it is going something out of our control. So whenever we do overtrade, it is not based on any analysis that we know. So avoid overtrading. Then overlot, we should avoid the overlot. Usually we have some we know how much we are capable of the lot size, but what happens is sometimes if you deviate your own idea and putting a more lot, which means it's definitely a gambling, because you are experiencing something. I mean, you are expecting something to be happening very rigorously, whether it's a very trending market or something. So you can think like you could make a more money from this trade, but suddenly everything goes in a wrong direction. Then it will be a not proper way. Then revenge trade. Revenge trade is not advisable. Revenge trade is nothing but if you lose one trade and you lost money of 1000 or 2000, so in that time what you think is on the same day you are going to get back all your money in the next trade, but it won't happen because that trade is not placing with the analysis that you did. Then no average trade. We should not make no average trade. We should not put average traders. I mean, like if there is an ongoing trade is going on and it is going in the wrong direction, so that way what we usually do is we are trying to average the existing trade to cut the losses, but that is not a good practice if you don't do a proper analysis. So whenever you want to average your trade, you should do a proper analysis whether the upcoming trade is in a right position or not. Otherwise the average trade is again not a proper analyzed method, it is a gambling. Don't use your full capital. If you have a 5 lakh or 1 lakh in your account, so you should not take risk and put all your money into one single trade. So that is not a advisable way. We should know how to diversify our money into multiple different things. So just know the capability of one stock, how it will perform, and take the appropriate risk. Uh, don't spend all your money in one single shot. Don't use the full leverage. Leverage is nothing but you are borrowing money from the stockbroker. So, if you want to use your full leverage, then definitely you are taking a very big risk and it will mostly never come back to us. So, don't take the full leverage. I mean, don't borrow a very big money from your stockbroker. That will be a very big disaster in your trading day. Don't get influenced by others. Whenever others, whether in the social media or your friends or relatives, giving a calls or a signal for any trade, don't blindly trust them and go and take the trade. Don't do that. You should sit and look for the proper analysis, and then you need to tell them that why they are picking the stock. So you should know the reason for the stock. You should know why you are going to buy the stock. So you should know all the history of the stocks. So just perform the stock analysis before placing any trades. So don't get influenced by others. Don't follow the signals blindly. Don't grow your loss. Just cut your loss with minimum percentage. If the loss is getting increased, you should not do that. Set a stop loss. You should know how much money you are going to lose today or gain today. Whenever there is no stop loss in your trade, definitely you cannot control. Most of the time, what happens is unexpectedly a very big candle hits the bottom or a top. So that time, whether it could be a buy or sell trade, it won't go in a right direction and it will give you a loss of money, or sometimes the entire capital get washed out. So anything can happen in trade. So don't you know don't set up. Do not practice without a stop loss, I would say. Then don't change the decision while live trading. You know, before entering into a trade, you could know that what are all the possible things you would do in the trade. Where will be the entry point, where will be the exit point. If the trade goes in the right direction, what will be the risk reward. If the trade going in opposite direction, what will be the stop loss, and how much loss you are going to lose. So you should know all that. But in the middle of the trade, if something has happened and you change your decision, that is not an advisable way. Also, that is not a proper analyzed method. Then don't change your plan continuously. If you have a trading plan, and you will, most of us would get profit at least 1 week, but then in the next week what happens is something could happen to that trading strategy, or you would start getting losses. So that time what usually people would do is they would skip the current plan and go for the new plan, that they would sit and create a start. They would skip all the one from the previous one. So that is not advisable. You should sit and check your plan, and where it goes wrong you need to fix that flaw. Then you need to improve the existing plan. You need to develop it actually, but we should not rather we skip it. So it is not advisable. Don't change your plan, just start developing your plan, upgrade it, then learning. So we need to learn from our mistakes. Whenever the new traders, the beginners are entering into this trading career, they would start making mistakes. So that time they should not get afraid of the trade. They should know where how the mistake was happened and what causes that mistake. So that is the time they need to perform the analysis, and they need to understand how they can resolve that in the future. So we need to avoid them, avoid afraid of getting what we are getting from the trade. We need to learn from the mistake, then learn market analysis. As I already told you that whenever we enter into a trade, before entering into a trade, we need to study the market, how the today market will be. It will be a trending market or ranging market. So we need to analyze there are a lot of sources to analyze. We can perform a technical analysis, fundamental analysis. There are a lot of things is there. So we need to analyze the market with the help of a lot of online sources. Then you can take a trade. Learn risk management and money management. The best professional traders are having a very good quality in both risk management and money management. Risk management is nothing but how much money you are capable to lose, and money management is how much money you are having and how wisely you are going to spend. So if you know how much money you are going to make, you could have a plan and you should not deviate that. If you know how much money you have and where all you are going to invest, how you are going to diversify that, so that is the best money management technique. But if you take risk of all your money in one single shot, then it is not proper risk management, it is a gambling. So avoid gambling, do a proper research and follow the strict risk management and money management planning. Learn market behavior. Learn the market characters, like sometimes market goes in trending way, sometimes it goes in a sideways. So I mean the range bound market. So whenever you enter into a trade, or whenever you are planning to analyze the market, so that time you should know, the first thing comes to your mind is how the market will behave today. You should perform some analysis and identify how the market, you need to forecast the market, how it will react today. Then learn technical analysis. There are a lot of technical indicators are available on the internet. You can study them. Each technical indicators have its own type, like some indicators categorized under trending, I mean momentum. Some indicators categorized under oscillation, some are under the trending. So there are so many things are there, and some screeners we can use. So use the technical indicators wisely to make a better profit. Learn fundamental analysis. Fundamental analysis is more important in the stock market, because we should not blindly go and buy the stock. So we need to perform a proper research, like in fundamental analysis there are so many key aspects of the PE ratio, OPM. There are so many things. So we will learn in the upcoming videos. So fundamental analysis is very important when you pick the stock. Then back test your strategy. If you have your strategy with you already in place and it give you success, also you need to test the strategy periodically. So also whenever you find a new testing I mean you build a new strategy, you need to back test it. There are a lot of tools available on the internet so that you can perform the back testing at any time. So you don't need to risk your real money in the live market. You can back test and improve whatever is needed. Develop your trading knowledge and skill. Please spend at least 10 minutes of your each day so that you can research your day-to-day activity and you can review your tracker, so that you could know what was your real potential, and you need to develop the trading skill. You can analyze the stock. There are so many things to learn. So learn day by day and improve your trading style. Thanks for watching this video.